You are watching the tape on a normal afternoon and one order crosses it. 50,000 call options on the VIX, the index that measures fear, every single one bought at the same price, 50 cents. No name on the ticket, no press release, no explanation. And the next week, the exact same order shows up again, same size, same 50 cents, like a signature. For more than a year, nobody on Wall Street could tell you who was sending it. They just watched billions of dollars in exposure appear on the fear gauge, paid for in steady 50-cent slices, and then go quiet. So they gave the ghost a nickname. They called it 50 Cent. My name is ST, and I spend way too much time trying to make sense of the market. If you have ever watched one anonymous trade ripple across a market that is supposed to be far too big for any single person to move, and wondered who is actually standing on the other side, subscribe and stick around. Because this one has a real answer, and the answer is stranger than the mystery. Let me tell you what people actually saw. Starting around 2016, a single buyer kept stepping into the VIX options market and buying call options, the contracts that pay off when fear spikes. The buyer never haggled. They paid 50 cents per contract over and over in clips of 50,000 at a time. A derivative strategist named Pravit Chintawongvanich, who was at Macro Risk Advisors, started tracking the prints and put the nickname on it. At one point, this one buyer was sitting on something like $120 million of these options, around 8.5% of all the open call interest on the VIX. One participant holding almost a tenth of the entire bet that fear would rise. So the desk did what every trading desk does with a mystery that big. They started building a suspect list. Was it a hedge fund swinging for a payday? That was the obvious guess, and it was wrong, because hedge funds do not buy the same thing at the same price for a year straight. They chase, they flip, they get bored. This buyer never flinched on price. Was it a market maker? Also no. A market maker hedges both sides and stays flat. This was one direction only, fear going up every time. Was it a pension fund or a volatility fund quietly running a strategy? Closer. But the pattern did not look like someone trying to win. It looked like someone trying not to lose, and that distinction is the whole story. Now watch the prints closely, because this is the twist that flips the whole case. 50 Cent was almost always losing money. Most of those options expired worthless because most weeks the market does not crash. 50 cents? Gone. 50 cents? Gone. To the people watching, it looked like a slow, expensive mistake repeated on a loop, which is exactly what good insurance looks like right up until the day you need it. In May of 2018, the Financial Times finally put a name on the ghost. The buyer was Ruffer, a quiet investment firm in London managing around $20 billion, founded by a man named Jonathan Ruffer, a firm best known for one thing. They protected their clients through the 2008 crash, while almost everyone else got run over. 50 Cent was not a gambler. It was a fund manager buying an umbrella every week with other people's money and not caring that the sun kept shining. And then came the day the umbrella mattered. In early 2018, during the blow-up that traders still call Volmageddon, when a popular bet against volatility detonated overnight, 50 Cent reportedly made around $200 million in a single week. All those expired 50 Cent tickets paid back at once. But that was the warm-up. In March of 2020, when the pandemic hit and the market fell apart, Ruffer reportedly turned a position in VIX-linked derivatives worth roughly $22 million into about $800 million. And across all of its protective trades, the gold, the credit, the volatility, the firm reportedly pulled in around $2.5 billion, while the rest of the market was bleeding. The whale that everyone thought was bleeding out 50 cents at a time had been building the best hand at the table the entire time.
So did the whale disappear? Here is the honest turn, and it is the part nobody puts in the headline. It never disappeared. The trade just stopped being a mystery. Once the name was attached, the magic was gone. It was not a conspiracy. It was not a signal. It was not somebody who knew something you did not. It was a firm doing the single most boring thing in finance, paying a small, steady premium so that one bad day could not end them. The disappearance was always just insurance quietly doing its job and the spotlight moving on. And once you see that, you start noticing the other whale, the one that does not hide at all, because there is a second giant in this market and it does not need a nickname because it tells you exactly when it is coming. JP Morgan runs a fund that holds something like $18 to $20 billion of S&P 500 stock. And every quarter, on the last trading day, it rolls a massive options collar. Tens of thousands of contracts at a time, big enough that the banks hedging the other side have to buy and sell real index futures to stay balanced, big enough to nudge the whole S&P around the level where it sits. A whale that shows up on a calendar, and almost nobody calls it mysterious because it RSVPs. That is the part that stuck with me. We built a year-long ghost story around 50 Cent, the anonymous buyer of fear, and we barely blink at a fund that openly moves the index 4 times a year. We are trained to look for the gambler in the dark. We are trained to assume the biggest position in the room belongs to someone clever and hidden, sitting on a secret. And sometimes it does. But the trade that made $2.5 billion was not a secret bet at all. It was a man in London buying an umbrella on a sunny afternoon, 50 cents at a time, and waiting. So the next time you see one enormous anonymous position flash across the tape and then vanish, do not ask who is trying to get rich. Ask who is trying not to die. Because on the day the storm finally comes, those are never the same person. And the whale that disappeared was just the one who brought a raincoat to a party where everybody else came in shorts.